Oil prices rose today as the Middle East conflict escalated, with both sides targeting critical energy infrastructure. President Donald Trump called for de-escalation following Iran's attack on the world's largest LNG plant in Qatar. He stated Israel would refrain from further strikes on Iran's South Pars gas field, which then prompted Tehran's retaliation against Qatar. Let's welcome Susan Bell, Senior Vice President of Downstream Solution at Rystad Energy, for more on this. Good afternoon. Thanks for joining us.
Thank you for having me.
So Reuters reporting that Iranian strike has damaged 17% of Qatar's LNG capacity, with repairs expected to take anywhere from 3 to 5 years. How quickly has this conflict escalated from something that was brief, especially brief impact on oil prices, to a situation with maybe potentially long-term consequences?
Well, I think yesterday's attacks were a very significant development in the conflict, and it does bring it to a much more dire situation, and there is the potential now for significantly more damage of infrastructure in the region. We are seeing Iran has targeted refineries in the region as well, and it does pose the question on whether there is the potential for a quick resolution to this, or whether there is going to be lingering damage. Certainly the impact on Qatar's Ras Laffan facility, the markets are going to feel that for 3 to 5 years. In 2026, it's going to be an immediate shortfall of LNG supplies for the global market. There's opportunity for other suppliers, particularly the U.S., to increase their build out to backfill that, but that won't happen until 2027 or 2028. So that's on the gas side of the business, but the oil side of the business did see a fairly large impact in terms of prices. And the oil side of the business was, I guess, in a bit of a better position because there was so much surplus inventory, both in floating storage and onshore storage. But that won't be the case if the Strait of Hormuz remains closed for a significant period of time. And it certainly won't be the case if we lose production capacity, and it will take months, if not years, to restore production capacity. We're not there yet, but it's now within the realm of possibility.
You mentioned those Saudi refineries, the Red Sea refineries, I believe, that were targeted by Iran. How important are these Red Sea refineries compared to the other refineries that Saudi Arabia has, the Gulf refineries?
Well, I mean, the Red Sea refineries are somewhere in the order of 1 million barrels a day of capacity, and they do supply products for the export market, which is important because it's the one outlet that product can get to markets. Of course, if it's not going to Europe, it has to transit the Red Sea, where the Houthi are active, so it's not risk-free. So the refinery strikes are an issue in Yanbu, which is that Red Sea port that Saudi Arabia has. But the bigger issue is the port facilities to get crude oil out. And Saudi Arabia had been operating their east-west pipeline to move upwards of 7 million barrels a day of crude oil from their Abqaiq facility, which is on the eastern side of the country, that would typically clear crude oil through the Hormuz Strait, to move as much of that volume as possible to their west coast and clear that volume from the port of Yanbu. We have now heard earlier this morning that Yanbu operations have been paused. We are awaiting confirmation through various sources to find out if that capacity has been damaged in strikes, or whether they're taking they're pausing loadings just for the time being as a precautionary measure to protect the people that work there, of course. But if the world loses that capacity, they had been moving towards exporting 6 million barrels a day of crude oil, which is only 1 million barrels a day shy of what their pre-crisis volumes were. So if the world loses that capacity, it does become really quite damaging. And we are certainly seeing that in Brent crude oil prices. They are moving more towards this, the extreme highs that Dubai, Singapore is seeing right now. But there's still a very large disconnect between those two markets.
We've seen recent movements in spot oil show like a pattern of increases followed by pullbacks. I'm wondering, from your discussions with investors and traders, is this because a lot of people were kind of hoping that this would be a short-term war and that maybe the Strait of Hormuz would open sooner than we're seeing it, which it's not really open yet?
I definitely think that that's the sentiment, and I think that there was a lot of, in the collective minds of the markets, Iran, struck Israel last summer, and it took some very decisive actions from the U.S. and Israel to stop that before it turned into something more catastrophic. And I think that the markets were perhaps considering that that would be the case this time around, but this time around it's proving to be a much more lingering issue. And the escalation, I think, is something that perhaps has taken the markets by surprise. And I think when you look at the forward curves on crude oil prices now, those forward curves are still quite steeply backwardated, but they have flattened out somewhat, which tends, it lends me to think that the markets are now considering that the impacts are going to be more enduring than what, the original assumptions were.
Obviously, a lot of people now looking ahead in terms of like the long-term effects of this war, obviously, and the damage that it's going to be causing long-term. When it comes to the Strait of Hormuz as a shipping route, do you think there's long-term consequences for that as well?
I absolutely do think so, and it depends on the outcome of the war. Certainly, if the Strait of Hormuz remains in Iranian control, there is always going to be risk, and there's always going to be reluctance to transit the strait. Right now, the vessels that are going through the strait, we understand they're getting through via a channel that has been designed by Iran, and they're receiving direction from Iran, and we believe it's to avoid any of the mines that Iran may have laid. So the risk is great for vessels that don't have that direct connection with Iran and getting direct instructions. I think a resolution that resolves or that eliminates the risk or really minimizes the risk would take the Strait of Hormuz out of Iran's control. And I'm not quite sure what that means. If it remains in Iran's control, I think there are going to be many countries that are starting to look for alternative sources for crude oil. And the countries that rely on that as their export mechanism to perhaps look at different infrastructure to get crude oil out of their nations.
Okay, we'll have to leave it there. Susan Bell, Senior Vice President of Downstream Solution at Rystad Energy. Really appreciate your insight today. Thanks for joining us.
Thank you so much.